If the stock just goes up to $5, you're talking about at a minimum 80% of the float that needs to be delivered in call contracts. Bed Bath and Beyond, if it starts ripping past $3 in the next week before Friday's expiration, this thing will become atomic. Good morning, everybody. My name is Trey Duman, and I'm the Devil Stockbroker. This is the Demons meeting for March 12th, 2023. We've got Grill Rockfish, Mark M, Shilp777, Swaz, Tip Flickering, and Tree Grinder in the chat. We'll give everybody a few more minutes to trickle in before we get into the analysis. But how's everybody doing this morning?
Doing well. A lot of crazy news going on. It's going to be an interesting week.
Yeah, tell me about it. We got a lot of stuff to cover. So I've got my list of tickers here. Let's go ahead and jump into these. So the first one that I'm looking at right now is Bed Bath and Beyond. We saw an interesting pop in the market with Bed Bath and Beyond that was inverse to it was inverse to the SPY. It was incredible. So this move that just happened, I think that this is a short covering round. Okay, I really do think it was. Bed Bath and Beyond was bouncing off of a low point, and it had broken the lows on. It had broken the lows here at what was this? The 6th of January. So if I switch over to a daily chart, one thing that I love to do, one thing that I absolutely love to do, is I like to mark my double bottoms this way, where I'm checking the bodies of these candles and looking for wicks down and a cross above. I think that maybe a weekly candle would be, yeah, the weekly candle is quite a bit more. This one makes it easier to see. So on this initial candle, we had this clear bottom that occurred between the body and the wick. And one thing that I do in order to look for double bottoms in the market is I wait for a double bottom to show a wick and either a close inside of this little area between these two supports, or between the body and the bottom of this first wick. I look for a candle to wick through this area and then for a recovery to happen right afterwards. So if you look at it on the daily, we had a close that was down here, which kind of breaks my rule. That would normally mean that it's not a trade, but I've been tracking BBIG on a weekly chart, and I noticed that on the weekly chart, it's a lot more accurate for these double bottoms. This orphaned island pattern is it's very similar to what we had seen just recently. So this orphaned island back here in what was this? This was summer of 2022. Right as this was occurring, that was when Bed Bath and Beyond skyrocketed and squeezed all the way up to a high of $30, which was insane. Like that's crazy. So there's something else happening with Bed Bath and Beyond right now, where they have this huge gamma ramp, and the options that are open on Bed Bath and Beyond are actually so monstrous that it could result in a squeeze that hits shorts and major institutions and market makers at the same time. I'm going to go ahead and drop that chart here in the Discord, and I'll show it to I'll show it on the recording. You guys can take a look at it in the Discord. But this gamma ramp chart shows that at about $3, more than 30% of the float would be in the money. If you go all the way beyond that to, like, say, $5 and $6, then you have almost 100% of the float going in the money. And that's based on the call contracts that are traded in Bed Bath & Beyond. So I'm going to throw another chart down here. For one, it's worth pointing out that the the pie chart for the put call ratio shows that there's an overwhelming amount of calls on available for Bed Bath and Beyond. So that's first and foremost. The second thing to look at is that on for this week on March 17th expiration is this huge ramp. So starting at $1.50, there are 5-digit amounts of call contracts in open interest expiring at every single strike at 50-cent price increments. So starting at $1.50, which it's now threatening to break through, there's 37,000 call contracts open. At $2, 55,000 call contracts. $2.50, 32,000. $3, 41,000. And then all the way up to $5 is 44,000. So there's a big triggering point that can occur here. If the price starts getting bid up to this point where all of these call contracts start going in the money, then it can cause a massive supply crisis for Bed Bath and Beyond. The reason why this is significant is, and you can take a look at my previous video that I did on Bed Bath and Beyond. I'll actually do I'll go ahead and do a search on it as well. So you can take a look at the video that I just posted in the Discord. This is a look at it really quick. The gamma ramp that I discussed in Bed Bath and Beyond, this video is a little bit dated, so some of those contracts have expired. But as you can see, based on this gamma ramp that I was just showing you here on the table in front of me, the situation hasn't really changed all that much. And once you see Bed Bath and Beyond going above $3, not only do you have this week's contracts all going in the money, you also have the next several weeks' contracts going in the money, which there's not as many of those, but there's still enough to create a massive ramp effect that can slingshot the price forward. And the reason why that happens is because all of these contracts were opened up by institutions that most likely don't have the shares on hand to deliver these. So if what ends up happening is you see retailers purchasing shares and call contracts in massive numbers, that it's going to it could cause them to have to purchase shares in order to hedge themselves or delta hedge against that upside volatility. So check out the video that I just posted. You can take a look at that on your own. The and you can get a much better look at the technicals. But that situation with Bed Bath and Beyond is still in play. Now the question is whether we actually see that price action this week. If we don't see that price action this week, where we're going to at least $3, then I'm probably going to say that it's not going to happen at all. Um, just because, or at the very least, it would happen much, much later at a later time. But this is where the majority of the gamma ramp is this week. It's happening this week. If it's going to squeeze, it's going to squeeze this week. And the higher it goes, the closer it gets to $5, the better chance that it has for it to go even further than that. The reason why is because there's that 2-day settlement that we talk about. The biggest factor that causes these squeezes to occur is when, as these contracts are going in the money, people are exercising them immediately. If people exercise these contracts and they have not been hedged for, then the institution is forced to go buy shares at market price in order to deliver them. And that can cause massive movement in the market, like extreme moves. So this is a risky business. It's a very risky endeavor. Bed Bath and Beyond is obviously still at risk of default and bankruptcy. They've got a lot of financial problems, and they're closing stores because of their poorly performing sales. But nevertheless, this gamma squeeze factor is totally independent of that, and all that has to happen is the price just goes up. If it goes up suddenly and without giving any of those institutions a chance to prepare for it, then it doesn't really matter what the financials of the company are. These guys just flat out have to deliver on those shares, and they're going to have to. If they don't have the shares, they have to go buy them. They're obligated. They must do it, and that can lead to things like margin calls and massive, you know, liquidation events as well. So shorts can get slaughtered here. And then second to that, I'll go ahead and pull up my Ortex on Bed Bath and Beyond just to recap on what the short interest is. Short interest on Bed Bath and Beyond is it's like over 70. Yeah, 75% short interest of the free float. So the shorts that entered into all of these positions they're basically shorting at the bottom. And look at how many of these idiots are in here at below $2. The short interest was at 52% when the price was at a high of $1.80. And now they've added an additional. How many shares is this? Let me look at this in terms of shares. All right, so from this point, let's go from here. So from this point, short interest was at 59.5 million shares when the price was at a high of $2. Okay. Now let's go over to here. The price was at a high of $1.37, and the short interest has grown to 86.39 million. So more than 30 million shorts added to their positions when the price was going down to a high of $1.30. These guys are shorting the 52-week low on this company. Granted, they have a thesis for it, but there's so many of them. There's so many of these idiots that if they get called on to deliver stock, there is mathematically no way they can deliver all of these positions. It's not physically possible for them to deliver on all of those shares of stock, even with the dilution, even after the market equity sale that Bed Bath and Beyond did, even after the private placement of shares. They do not have enough shares to deliver. It's fundamentally impossible. The amount of shares on loan, over 105.6 million. That's 92% of the float on loan. So 92% of the float is on loan. If the stock just goes up to $5, you're talking about at a minimum 80% of the float that needs to be delivered in call contracts. Bed Bath and Beyond, if it starts ripping past $3 in the next week before Friday's expiration, this thing will become atomic. Oh, I almost forgot. This thing's also been on the threshold list as well. So they have been struggling to deliver on their shares for a while. If anybody in retail wants to hit these idiots, they need to hit them right now because this is when it's going to hurt the most. And you do that by buying shares, okay? Not call contracts, buying shares. Shares are what moves the price, okay? If you do call contracts and the price doesn't move in response, then it's just going to expire worthless. Buying shares will actually move the price. Attacking the ask is what's going to push the price up and put those call contracts in the money. So that's if this is something that people are going to talk about and circulate, I just want that to be very clear. Purchasing shares at asking price and causing the share price to lift is what causes those contracts to go in the money. Those contracts going in the money is what forces market makers to delta hedge. So unless the share price goes up, they don't have to delta hedge. So if the share price stays where it's at, it's not going to be enough. So if people get these wild and crazy ideas of buying these YOLO zero DTE contracts like morons and just picking up a bunch of call contracts for 1 week expiration, it's not going to do anything. Okay. You have to have fire and gasoline. Okay. The options, that's gasoline. There's a lot of gasoline just laying on the ground, and it's leading to a trail of like basically a bomb sitting in the freaking market maker's warehouse. Okay. If the But you have to put flame to it. Okay. Buying shares is what moves that lit match, that flame, closer to the gasoline. Once it ignites, it'll carry itself. Okay. It will go ahead and follow the trail. But without putting that flame to the gas, it's not going to set off. Okay. That's how this relationship works. So keep that in mind if you're going to talk about this and discuss it on social media. That is what is required. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.